All right. Good morning, everybody. So the Asian markets closed up, but the European markets starting to slip. They're waiting for their central bank to come out with their rate decision. Interesting enough. Futures in the red, Europe flat, Asia up. See that down here on the lower end of trading view. As usual, we want to find something that can look at the dollar and give us a little bit of perspective. Generally speaking, FX Street is usually a good place to go. They usually have a nice little excerpt here on the dollar. And then they give you a perspective of the anticipated economic events for the day and their impact level. And you can see there's quite a few Bank of England decisions here. All of them are anticipated to be extreme, which explains a little bit of the sideways action in the last little bit. When we bring it over to Thinkorswim, go to Market Watch. It's a really long list today. If your list looks like this and you find that it's very cluttered and you want to kind of clean it up a little, hit the show all and turn everything off, and then just turn on Econo Day event. Bring the description over so it's next to the time. And you can see that almost every single hour until we get through lunch has some economic event. There's additional auctions today at 11 and 11:30. You got to really keep your eye on those. That's midday game changers right there. I've said it before. I'll keep saying it again. Now watch the clock. Yesterday morning, while we were live streaming in the large caps, I gave a very interesting example of how watching the clock can be so valuable. That 9:55 to 10:05 time frame. And if you missed it, go back and watch it. I think you'll find it slightly amusing. The clock is one of your best indicators. It can help you make trading decisions much better than your old school indicators. Very valuable tool. Today it's going to be a very important one, but we're still going to be leaning on any news coming out of the Ukraine. Uh, one bit of headline that I see was basically that the Ukraine says they're willing to show up and they're willing to talk at these negotiations as much as as much as they need to, but until there's a ceasefire, they said they don't see anything sticking. So one bit of headline we'd really want to keep our eye on is a ceasefire. So we do have a little bit of news coming out at 8 that's going to be the BOE announcement. Bank of England, really keep your eye on that clock today. You can see I've kept the daily up here on the side momentarily just because we've got this angled trend line and we hit it yesterday, kind of pulling back across it. Yesterday afternoon when I was streaming in the large caps, I pointed out that there were buy signals on multiple names yesterday going into the afternoon, and I stressed it doesn't matter if we have a valid buy signal if the signal is in an environment where we see elevated risk. So for an example, Apple, Beautiful breakout buy signal. That is a buy signal anywhere you find it, every time you find it. But if you're looking to get into this market in the extreme conditions where everything is news based and just violently shoving everything around, you're gonna, you know, you get what you get. This is a valid buy signal, but I don't recommend buying it. I don't recommend that unless you know ease into it slow, or you in some way use a defined risk spread. Just sit back and day trade this stuff and wait for the swings until they do something with the war in Ukraine. Notice when I come back to the ES, it failed to break out. Now, yesterday I went through the FANG names. It wasn't just Apple that had that buy signal. Over half of the FANG names had that buy signal, but the S&P did not when we're looking at the ES futures. We are outside of the weekly expected move. In the last, well, since the start of this year, there's been 2 times that we've ended the week outside of the box. Think that through for a minute. Since January of this year, every single week we've closed inside of the box except twice. That gives us an 80% closure inside of the box. And we're only supposed to have a 70%. So we're actually doing better than we're supposed to, right? Which is one of the reasons the S&P is so great when it comes to expected move. It's more accurate than any other expected move out there, is the S&P. So the expectation is that we're going to come back inside the box. We tried to get a butterfly built yesterday for Friday's close on that line. Didn't get filled. We'll try again today. They're $10. If you lose, hey, you're going to lose 10 cents, right? $10. Whatever, right? I think we'll survive. We lose 10 cents. It'd be all right. For today, we have already tested that pivot point. It's lining up really nice with the 50-period moving average. The green line, this green line down here, so I can be specific about which green line we're talking about, 42.91. That is the 20-period daily moving average. Daily moving average. That means we're going to go out to a daily chart and look at a 20-period moving average, and we've got it plotted on our intraday chart. We broke through that yesterday. If we were to show previous days of that moving average, you can see how we first hit that 20-period last Friday and deflected off of it. We hit it yesterday, broke through it, found support on it, crisscrossed through it a couple times. Now we're above it. So we are back above the 20-period daily moving average, but we are still below the 50. Right? So is what it is. We'll work it out. For today, it's all going to be news based. At the very least, we will expect to maintain yesterday's range. It's a very big range. So we would expect to stay inside of yesterday's highest point and yesterday's lowest point. That can take us from 43.60 all the way back down to 42.40. It's a 120-point move. If you want to narrow that down quite a bit, you could start with the Globex low of today, which is around 43.11, that COG line, and the Globex high, 43.70-ish. Pretty close. That's a much narrower range that can define your structure of the day. Meaning, if we stay inside this, we're very likely going to have a choppy, lots of reversals, big wicks, not a lot of clean setups. You may find that difficult to trade. So if we were to stay inside that box, you could decide that it's not worth trading and go do something else. Maybe, go to the S&P, the SPX, and trade that with options. If we manage to get out of that box, we should have some relatively decent movement. We look at this on the volume profile. You can see where price ran into trouble yesterday, hit the resistance at that 43.60 area. And right now there is volume support very close to the value area high, 43.16. So we found that support in the overnight hours. So far it's holding. But we have a lot of volume resistance over our head, basically where yesterday's high is at. That traps us. So we're going to need to see a significant push to get beyond that level. It shouldn't be subtle. If we're going to make it through those levels, it will take a significant push. You should see it in the sectors, tick trend, cumulative tick, UVol, DVol, all of the things that we go through and look at every time we take the process, right? Again and again. Now the Nasdaq is sitting in a better position than the S&P. The Nasdaq is basically looking at support on yesterday's level, right? So we zoom in and kind of talk this out. There's this pivot point here, the midday around 13.85. It's a significant level of support. We broke through it, so there's no liquidity. There's trader wise, there's no liquidity, but there is old volume now, like a volume shelf, volume support, a volume node. So we're going to look for that to hold. Should we break it, we will perhaps make contact with the daily pivot point. We would have to break the 50-period moving average to get there. Yesterday, the Nasdaq broke through the 20-period daily moving average, just like the S&P did, and it is now underneath us. It's underneath that daily pivot point, sitting on the quarter at 13,775. So should we break the daily pivot, 13,775 is the 20-period that we're going to expect to bounce on. We do have overhead resistance. We have an angled trend line. That angled trend line is going to cause us some concern should we run into it. It's going to be a little bit of an issue. We are outside the box, the weekly expected move. Now we don't know the stats, or I don't know the stats because I haven't counted them. But you can go out to a daily chart and you can look at just year to date and kind of ask a very simple question. How many times has the Nasdaq closed inside the box by the end of the week this year. The very simple thing to be able to go in and do that. Just bring in the weekly expected move. Come back. Not too hard, right? This is year to date. You could just mark out every one that did close inside the box. So all of them except two, just like the S&P. Easy enough to figure out. You can even count back and say, well, how many of them are there total? How many weeks have we had since the first of the year? How many closed inside the box? How likely is it that we will close inside the box this time? One thing about this indicator that is interesting is one single miss isn't really too big of a deal. But if we happen to miss multiple times in a row, it starts to become a big deal. Usually it's an indication that the firms or the institutions, the market makers, are getting it wrong in the volatility, that they're way off base. It also starts to imply that volatility is really picking up because it takes volatility to get us outside of the box. So we made it through a critical level yesterday. We're finally outside of that range that we've been fiddling with for a while. You can see it here on the daily chart. Think of it as a balance zone, right? That the market was in balance. And we finally got out of that thing. Yeah. And now we just got to stick it, right? We just got to hold. We've got an ADR of 3.6%. We've got an additional market maker move of 1.3. If you add those together, we've got an expected move on the day of almost $700. 700 points that the Nasdaq could go up and down, and we wouldn't even consider that to be an unusual move. Imagine that. That's a pretty big move. We're resting on the value area high. We took a deflection yesterday in a shallow area of volume, and there was not a significant amount of volume printed. It's worth noting. We do have a lot of volume support underneath us from this box, but we are outside of the box. And one way of looking at the volume profile is that if we are outside of the box, we want to have an idea of where price is going. Is it moving farther away from the box, or is it moving back towards the box? And generally speaking, when we're outside of the box, we expect price to get back inside of it. So for today's trading, other than the news that we're expecting to shake the market, we really have an expectation that we're going to maintain yesterday's range. Just like with the S&P, though, I would mark out Globex range, and then I would mark out yesterday's range and consider those two different ranges. It's very likely that if we stay inside of our own Globex levels, which is it's plenty of room, we could do that. Is very likely going to be choppy and nasty. But if you just set an alert and get a notification if we happen to break outside of that range, then you're likely going to have a really good trade setup because you'll have a breakout. We had a significant break back up in oil. Gold too rallied back up, and Bitcoin's kind of flat and holding the line. It had that little weird move last night after hours, but it just stalled out and quit doing anything. Rally in the bonds. There goes oil again. Somebody somebody lit the fuse in that thing. Dollar's flat. VIX is flat. Now the thing about the VIX, if you were watching the options market yesterday, we finally had this change in market yesterday. Right? We've been waiting for it. When you come into the options chain and you get familiar with being here quite a bit, you start to see it like support and resistance, momentum and trend. It's in here just as much as it is in the candles, right? There's resistance in here. There's support, momentum. It's all there. You learn to read these numbers, and I don't want to say you don't need candles, but you don't need them as much. You can also use this for validation of what you are seeing in the candles, or vice versa. You can use the candles to validate what you're seeing in here. But yesterday in the volatility, there's a major change that came in. The reason I went to the SPX, although I'm talking about volatility, is because the VIX is volume from the SPX options. I know we can nerd out and kind of run down the rabbit hole on volatility, but let me just break it down nice and simple for you. The VIX is volume from the 30-day options in the SPX. That's it. That's it. In a nutshell, nice and sweet and easy. That's that. So when you're looking at the SPX and you see that it has an average implied vol of 27.32, that's telling you that the VIX right now is probably very close to 27.32. And of course, there are going to be times when they don't quite line up, especially in the overnight hours where things are always a little wonky in the options world. So it's not dead on, spot on, perfect, but it's really close, isn't it? So you don't need to go to the VIX when you're sitting here already in the SPX options. You can see the VIX, it's right there. If that shocks you or surprises you, then you should probably go to my volatility school. There's a whole lot more than that you want to find out about. But yesterday we started to see a little bit of change in the VIX, specifically in the VIX futures. Now, these are not the same. These are actually something that you can own, you can buy, you can hold on to. It is a thing, it's a widget. And we started to um, break that backwardation that we were in. Yeah, that madness, huh? Now, if you go back and watch some of my morning briefings from, say, last week, this was really steep. It was pointed in the wrong damn direction. And we were in a very, very sharp backwardation. And now, after yesterday, we broke that. And the far end of the curve is dropping back down again. In the middle, we're dropping back down again. In the front, we're dropping back down again. Right. So the way Contango is supposed to look, the way the VIX is supposed to look, is a nice little curve like this. And that would be Contango. When things are violent like they were last week and volatility is up, it ends up looking like this. And that's not what we want, right? That's backwardation. Yesterday, this side dropped massively. And for some reason, so did August. Maybe they know something we don't know about August. You've seen it in the options yesterday. I'd say I felt it, but the trade that I was in didn't last very long, so I certainly didn't really feel it, but we felt it anyways, though. Right? It was solid in there. If you were in there watching the options chain, keep in mind when you're looking at the VIX candles are a math formula of the options in the SPX 30 days out. The options on the VIX, the VIX, and these options, they don't belong to these candles. I know that probably confuses everybody, but if you're looking at these options and you're thinking, oh, I'm going to buy me a 27 strike call because it's right outside the money, these options 30 days out do not belong to these candles in the VIX. These options 30 days out belong to the VX futures 30 days out. And at the money is 27.55. So if you bought that 27 call, you're in the money, not out of the money. Drag will catch up. What's the point of all of that little discussion? Be very careful of the options today, guys. Do spreads if you can, right? Instead of just buying a call today, buy a call debit spread. Instead of just buying a put today, well, on the put side, you can just buy a put. Let that volatility work in your favor. But it's going to be extreme. It's going to be violent. If they strip more volatility out of this thing, you're going to feel it in your trades and you're going to find it very hard to see profit. They crushed the volatility out of this thing massively yesterday. If you were short calls, you had price running at you crazy, crazy hard. And yet, if you were short calls, you made money yesterday because those short calls lost an insane amount of volume and value when this fell, right? Well, it ain't done yet. It ain't done even in a little bit. If they continue this strippage of volatility today, like we saw yesterday afternoon, options across the board, all over the place, they're just going to drop like crazy. Their cost value. Now, that's great if you're the seller, and I do a whole lot of selling. I'm fine. But if you're buying a bunch of stuff and you're trying to day trade today, oh boy, oh boy, it doesn't mean your call won't make money, but you're not going to make as much as you would if you could shunt that in some way by doing a spread. That's what I got for you guys. Got to keep it short today. Be careful, be safe. I'll see y'all tomorrow.